Jason Feer, Asia-Pacific General Manager for Argus, a leading provider of price assessments and data for the crude oil market. Jason Feer, thank you very much indeed for joining us. This is being seen as the most contentious meeting since 1990. Do you agree?
Well, I think there's certainly a lot on their plate. I mean, you were talking before about Libya. That's obviously a major concern. There's also this divide between countries like Iran and Venezuela, who really can't increase production, so they're quite happy with high prices. Any decline in prices really comes out of their pockets. So I think there are several sort of fault lines within OPEC right now, and I think we'll sort of see those come out today during the meeting.
Well, we had the International Energy Agency just last month trimming its global forecast, demand forecast. Do you think there's going to be any follow-through from that as far as OPEC goes? Because there seem to be divisions on, well, do they increase output or do they actually at the moment stay pat?
Well, I think the interesting thing, of course, is always the difference between the official target, or the quota, and actual production. So, I mean, the cartel right now is already producing over 26 million barrels a day, so they've already raised production. I think an issue for them, though, is that how credible are these targets, and if they produce substantially above them and don't actually bring the official targets up to within reasonably close to where they're producing, I think they lose some credibility. I think they're also going to try to send a signal to the market that most of the major producers within OPEC don't really want to see prices, above $100 a barrel, at least on a Brent basis. So I think it's more about the sort of signal that they send to the market than the actual decision in terms of supply that they'll bring.
Right, so, you say that they're uncomfortable above $100 a barrel, but as you allude to, compliance or cheating becomes that much more attractive at those prices, doesn't it?
Well, it's true, and in the past that's often been the cartel's undoing, is that too many countries have cheated. I think there's less chance of that right now because there's not a lot of countries, aside from Saudi Arabia, Kuwait, the UAE, that have excess capacity. Most of the members are pretty much producing at capacity. So there's less chance that will happen. I think another issue for OPEC members is that a lot of them have responded to the Arab Spring by increasing social spending. So although they talk about not wanting prices too high that it will torpedo economic growth, they all need reasonably high prices, say above 80 or so, in order to finance these promises that they've been making to their populations.
Jason Feer, what about the role of the dollar here as it continues its weakness?
Yeah, I think the dollar is an important factor here. There's certainly been a very tight correlation between the dollar and commodity prices, and as the dollar weakens, it has a tendency to push commodity prices up. Producers sort of argue that sort of levels out their buying power. And I think that's probably a trend that they're going to be fighting against in their efforts to bring down oil prices. I think the problem for them, though, is that at the current levels, we're starting to see some demand destruction. In the United States, for example, the past couple of months, we've seen declines in gasoline demand, not very big ones, but that's a worrisome sign in terms of keeping demand up.
Yeah, and if we had another increase, some are saying that we start to see significant, even more significant demand destruction when we see WTI above $120 a barrel on a sustained basis to go along with that.
I think I do. I mean, particularly in the United States, I mean, it's very clear that when gasoline gets up to about $4 a gallon or so, that there's a significant decrease in demand. I think we're also they should be quite concerned about some of the signs that we're seeing of a possible slowdown in China and some of the economies in Asia, driven by these efforts to slow growth as inflation becomes a problem. So I think on the demand side, there's some real risk here. To prices in the sort of short to medium term, I think.
Jason Feer, thank you very much indeed for joining us. He's from Argus there, just talking about this latest meeting for OPEC as they convene once again at their headquarters in Vienna.